Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call.
Good morning. Welcome to Morning Call. I'm Lata and with me Anuj and Sonia. We have a whole lot of cues to analyze as our montage depicted big numbers over the weekend. But I think the important point for us to state for those interested in markets is that bulls have clearly got their mojo back. And the Asian markets today are actually abetting the mojo that the bulls have already got. And for me, it's not just about whether there is a buy tide. The more important part is that growth is back unmistakably. I mean, look at the results. We played out some of those bites. Reliance results, you may squabble here and there, but it is still a great growth story. And then look at Idea, much better than expected. Canfin Homes, RBL, Thyrocare, MCX, all those numbers were extremely good, strong, very strong, compared to estimates or whatever. It was like 30, 40, 50% growth. And then I was just going through all the BSE notices. Look at the number of people who are raising money through QIP or through any other means. There is Adani Ports, Walkhart, Giant Agro, InSwift, Crest Ventures, Gokuldas, Kajaria. All this is in a single day. Notices that have come on Friday after market hours. That many are raising equity. Now, when you want growth, you may go and borrow. When you put in equity, then you're expecting really, some 3-4-fold growth. Otherwise, you wouldn't bring in equity. That's a very important takeaway from the way in which the micros are shaping up. And finally, of course, even CapEx orders, Cochin Shipyard, Greenply has completed an expansion. What I'm trying to say is whether you look at results or whether you look at the way fundraising is happening or whether you look at completed projects, growth is back with a bang. And therefore, equity markets are only catching up what they're already seeing. Yes, there will be some quiet before the Karnataka election, but we seem to have a good thing going.
Okay, we have a good thing going, and it's a truncated week, right? We have
that's the best thing going.
That's the best thing going, perhaps, on a Monday morning. Who wouldn't like to have a holiday on Tuesday? But, well, jokes apart, Anuj, morning. It's been a good week for us. The bulls have sort of tightened their grip on the market. But do you get a sense that that's something that could continue through the course of this week?
Morning, Sonia. Morning, Lata. Look, in equity market, it all boils down to risk reward. I think we've been making this point that Nifty has unfinished business at 10,700 to 750. With a gap up, I think we are there. So at 10,700, 750, the risk reward, if you are a fresh trader, is not in favor of you to take a fresh long. I think time to buy today would be... I don't know, I could be wrong, but I won't be surprised to see some red on screen today because the market has, completed a 66% retracement. It's run up a lot and it might need to catch its breath. It had a good expiry and then a good follow-up on Friday. Normally after that, some consolidation is not bad. In fact, you need it because otherwise if you run away, then in that case, the chances of dip increase. So I think traders need to wait for a dip now to buy into the Nifty, and that will happen for whatever reasons. So perhaps a 30-40 point dip on the Nifty, perhaps a 200-point dip on the Bank Nifty is par for the course. That needs to happen. And then perhaps you want to explore a long trade. For positional traders, 10,427 now is your sacrosanct stop, which was the erstwhile resistance, is now your big, support to watch out for. On the Bank Nifty, the issue here is 25,700 is the next resistance and 25,000 is the support. We are right in between there. So I think Nifty might give you more bang for the buck than the Bank Nifty, especially after two-day rally in the Bank Nifty. And there's a point, IT stocks corrected a bit on Friday. And if you see the trend of IT stocks, they have a 2 or 3 day correction and then they again move in, or move back. So that space is the leader, and I think that is one where you still have, perhaps a bit of a tailwind factor because of rupee. So that's something you could bet on. But on the Nifty, my sense is that a lot of good news is now in the price, and if you're chasing it now, you might have an issue. Friday was a day to chase. That's what we discussed, that Friday, first day of the new series, is day to chase. Today might not be a day to chase. Today might be a day to wait, see if the Nifty slipped into the red, and at that point, perhaps, a better buying opportunity may emerge.
I take your point. My point was generally about the quality of growth and not the markets at all. In fact, they could take a breather now. It's generally that during the early phase of a new contract, there is a little more buying than there is normally. But then tomorrow is a holiday. And then the US numbers were softer. I mean, it's not that 2.3% is a bad number for the US GDP, but it is a little softer than they expected. And plus the rupee has strengthened a bit. So all told, IT also may not be able to give the leadership today. Bank Nifty has run up a great deal. I mean, Axis had a huge rally as if it was a great result. I mean, the point it was making is that we think the worst is over. So there are enough reasons why there will be profit taking. My point was that overall the signs of growth are
Oh yes,
unmistakable.
no, I take your point. By the way, I just want to make one more point. I think Interglobe's intraday chart on Friday should come up. All day we were wondering what is wrong with Indigo. Why was the stock down 4-5% in a market which was strong and in a market where there was absolutely nothing. And it's the intraday chart of Indigo from 1500 to 1400. And by the end of the day, we got to know that Aditya Ghosh is moving on actually. And make no mistake, you know, businesses like these, leadership does matter. So I don't know. I mean, I would want to, you know, I think you would want to see on Friday the data because, you know, the way intraday the stock was falling and the way news came after, you know, the markets closed, it was quite interesting.
Yeah, I wouldn't be surprised the regulator also noticed this. Certainly. I mean, this looks like someone was in on the news, was it?
Well, you never know. I mean, these things you never know.
We don't want to say that because we don't know, but intraday move is showing something interesting.
Okay, but of course we'll analyze in greater detail the impact of Aditya Ghosh moving out. For now, you know, a lot of Asian markets are shut today, so keep an eye out on that. China, Japan, both closed. And our markets, of course, had an outperformance compared to most regional markets last week. So India was up more than 1.5%, while other markets like the S&P 500, even Hong Kong, largely flat. But let's take a look at what our wise experts have to say as we head into trade this morning. Lawrence Belanco of CLSA says the shelf of support provided by the December 18 lows at the 10,036 to 10,168 area has provided a platform for the market to regain its 200-day moving average and most recently its 50-day moving average, but the recent weakness is likely to leave the market trapped in a prolonged sideways ranging phase. From a long-term perspective, note the Nifty's breakout from the 2015 to 2017 consolidation pattern still suggests an upside ultimate target of 12,000. That's something he's been saying for a while. For now, Lawrence says look for ranging price action in the coming weeks. He adds that below the 10,036 level, the next chart support lies at 9695 to 9710.
Oh, yes. We've had other technical analysts also saying 12,000. Remember, the gentleman from Bank of America Merrill Lynch also was saying 12,000.
Oh, yes. By the way, today is Buddha Purnima as well, so greetings to those celebrating. But here's Nigel with the world view.
Well, the US markets were more or less flattish in Friday's trading session. We saw a profit booking on select stocks, the likes of Netflix that come in for more or less a flattish trading session. From the high point of the day, did see some profit booking, Apple, Netflix, as well as Alphabet. We had better than earning expectations, though, in terms of numbers. Microsoft and Chevron, both of them gave good set of numbers. The stocks reacted positively. But we had a few more results as well, the likes of Intel as well as Colgate. Those numbers as well, mind you, looked very, very good. But those stocks, they ended more or less flattish or mildly in the red. In terms of earnings season, it's looked very good for the S&P 500. Some experts on Wall Street, they said that, in fact, it's been one of the best earnings seasons ever. We have close to around 79% of the S&P 500 companies that have reported so far that have beat expectations. So good going there. In terms of economic data, the growth numbers were out, came in at around 2.3%. In fact, the markets were working with expectations of around 2%. So good all around. European markets as well ended with good gains in Friday's trading session. Well, all eyes are going to be on the meeting between Angela Merkel as well as Donald Trump. So we'll keep an eye out there. Remember, North Korea and South Korea last week itself, they smoked the peace pipe. So that was pretty good news coming in on that front. In terms of the European markets, Capgemini, that's one of the best performers in Friday's trading session, ended with gains of more than 5%. Couple of Asian markets, though, this morning, they're shut. So lucky the Chinese as well as Japanese markets, both of them shut. But the rest of the Asian markets that are open, they're trading with good gains. And that would mean the SGX Nifty is indicating a positive start, 30 to around a 35-point bump up. Back to you.
Okay, Nigel, thanks a lot for that. Positive start indicated by the SGX 50. In fact, let's hear out what market experts had to say on how the earnings season has panned out in the US so far and what the road ahead could look like. We'll come back. Kickstart a brand new week. The SGX Nifty is suggesting that things will be on the upside. But let's see how it goes. A lot of Asian markets are shut today, but our research team is here. There are plenty of stocks to analyze this morning. So let's get down straight to that. Anuj, what are you looking at?
So two large cap stocks, Sonia. First is Maruti, and here I'm just trying to take some time here. Strong delivery selling after results on Friday, and the stock is below 20 and 50-day moving average. So there's a good chance that it's now in a near-term downtrend, near-term only. But there's there's a good chance 200 DMA is at 8,500. And anecdotally, for portfolio investors, that's the best time to buy because if you see the history of Maruti, it's been one of the biggest wealth creators. So got to separate your trading and investment view here. The other is Sun Pharma. Pharma is showing signs of a big move. In fact, Nifty Pharma is up 7.5% this month, close second to IT. So and Sun Pharma has seen strong delivery buying for the last 2 or 3 days. So that would be interesting one to watch.
Okay. Well, I think the big stock people have to watch out for the Reliance post numbers.
Yes, the numbers were in line with street estimates, but I guess the stock could be in the red today purely because of the kind of run-up that the stock has seen. And there are more disappointments than, positives in the internals of the numbers. So as we know, the gross refining margins this time was impacted because of lower throughput. Not just that, the RelGeo earnings were under pressure as well. There was a cut in tariffs, so ARPUs are under pressure. But on the flip side, the petchem business has done very well. The growth is robust over there, and the retail business is very strong. The EBITDA has grown. So I guess because of the pressure seen on the gross refining margins and the RelGeo business, perhaps the stock could be under pressure.
Okay. Well, that's Reliance, but competitor Idea also announced numbers, Rima.
Yes, and prima facie, there is a big beat at the EBITDA level as well as on the bottom line. So margin beat has come in on account of cost-cutting initiatives as well as a couple of one-offs. So compared to estimates of 16.5% at the operational line, the company has reported an EBITDA of 23.6%. However, if you exclude the one-offs, then the margins would have largely been in line with estimates. The loss too on account of the margin beat is much better than what the street was anticipating. So the loss is 960 crore. That said, it's still a 6th consecutive quarterly loss by the company. Internals are looking good. Data metrics are good. Volume growth is up 43% quarter on quarter. Data usage per customer is higher by 28% sequentially. Given the sharp fall in Idea since the start of the year, there is a possibility that the stock could be in the green. But over the longer term, if you look at the results of Reliance Jio, Bharti, you can still see a lot of competition, and that will continue to keep the ARPUs of companies like Idea under pressure.
Okay, Rima, thanks a lot for that. Idea would be interesting stock. RBL Bank came out with a good set of numbers, Abhishek.
Well, Anuj, the bank has reported the highest ever net interest margin at 3.98%, and that is on the back of that the loan growth has been pretty strong between 35 to 40% over the last few quarters, and low-cost deposit share has also now crossed 24%. So if you look at the low-cost deposit share per branch, it has doubled in the last 9 quarters from around 20 crores to now 40 crore per branch, while for peers, it has just increased by 30 to 40% at the best for Federal Bank. Asset quality has also improved as slippages have declined sequentially. That led to gross NP also declining sequentially. Expect a green tick on the stock today.
Okay. Well, thanks for that. Nigel, how was Shree Cement numbers?
More good than bad, Lata, and that's been really the story for all the cement companies. The realization uptake that we have seen is something that's been positive. Same is the case for Shree Cement. Top line growth of around 15%. That's better than what the street was working with. Importantly, sales volumes came in at the upper end, but realizations came in better. The street was expecting a margin compression of around 100 basis points. That didn't really happen. So that's good news. It's only around 70 basis points odd. And the profit number jumps up by around 30%. Only problem is pet coke prices are up by around 5 to around 7% in comparison to Q4 pet coke prices. So that's what could pressurize them going ahead. But nonetheless, stock should open
Green, thanks for that, Nigel. But what about UPL? The numbers came in towards the dying moments of trade. Sonal, how did they look?
Numbers, Sonia. In fact, the positive part was that all the geographies saw some amount of volume growth. In terms of consolidated revenues, they grew up by 6.5%, and the volumes overall grew up by 8%. The margins came in higher by 500 basis points. That was because there was a forex gain of 200 crores versus a loss last year. And adjusted EBITDA margins, they grew by 30 basis points year on year. The PAT growth, however, was flat. That was because they had higher tax costs, and there were also higher interest costs. However, overall, the management sounded quite bullish on the call, and also Morgan Stanley is quite bullish. They say that the worst is behind, and FY19 looks very promising, and they reiterate their overweight rating. Expect the stock to be in green today.
Okay, thanks for that. Good numbers from UPL. Thyrocare, Ekta?
Well, I expect the stock to be in the green. Good numbers coming in. Revenue growth of 20%. Margins have improved year on year, and margins come in at 44%. Profit growth of 63%. Majority of the growth obviously led by the diagnostic business, up 9%. But the imaging revenue also is up 39%, but on a low base.
Okay. All right. Let's move on. Abhishek, Canfin Homes, how do they look?
Well, Sonia, despite the fact that management bandwidth has been eaten up in the last 6 months owing to the stake sale of Canara Bank, disbursement growth has now returned to double digits. They are at 12.3% versus last year when they were at just 3% growth. Yearly return ratios are the best in last 9 years. So now their ROA is at 2.09, while ROE has crossed 22%. But the fact is that they are seeing higher repayments. So despite disbursement, inching up to double digits, loan growth is just 7-quarter low at 18.3%. So expect slight, green or red on the stock today.
Green or red?
Yeah,
Why? I thought it's good loan growth.
No, the loan growth has been declining factor, but other things are picking up.
Okay.
Either way, Abhishek will be right, green or red.
One of the two will
There
come.
can't be a tie, I guess. Okay, Sonia, I guess Indigo is going to continue to see a bit of a fall.
Well, yes. Today, I guess, the first tick will be in the red. Now, we've discussed it, right? Aditya Ghosh has stepped down. The board has now appointed Rahul Bhatia as the interim CEO. For the last 10 years, Aditya Ghosh was president. He has grown the company to a 55,000 crore market cap company. And, the common psychology is when things are going well and leadership changes, it's not taken well by the street. Of course, just want to put down a couple of views that have come in. We spoke to Ramdev Agarwal, and he did mention that Aditya Ghosh's resignation has definitely come as a surprise. However, if the stock declines a lot, then it's a chance to buy. But I must say that, there were a lot of issues going on around Aditya Ghosh, that he couldn't manage a couple of things like the Pratt & Whitney engine failure. If you remember, there was that the staff manhandled a passenger, and that issue could not be handled well. So a couple of things were surrounding, controversy was surrounding him in the last few months or so. So some insiders were expecting something like this to happen, but yes, it did come as a blow to the market.
But my sense is, of course, while there would have been issues, I think the bigger issue could be, and again, we don't have any information, could be about what's happening, for example, with Air India, and whether Indigo wants to bid for it or not. I think Aditya Ghosh was very clear that they don't want to, and
Yes.
he's very clear about that. So I think clearly there's been some falling out. I mean that obviously could explain. Otherwise, I see no reason why.
It's an innings that will still be remembered for making Indigo the best,
Exactly.
most preferred
Yes.
airline.
Exactly.
So there's no denying that one. When one writes the record book of Aditya Ghosh, clearly there will be a big green ticks and maybe a AAA. Well, Nigel, LG Balakrishnan numbers?
We're looking at those numbers, Lata, because the numbers look good, and secondly, they've also issued a bonus. We've normally seen stocks reacting positively. Now, the top line growth of around 12% is good. There's margin expansion of around 100 basis points. The profit number hasn't grown so much because the effective tax rate is much higher. We here on CNBC TV18 were highlighting two-wheelers are selling, so those chains in the motorbikes, they will sell as well. And LG Balakrishna has nearly around 70% of the market share. Expect the stock to open up in the green. For the last year, the EPS was at around 55 rupees. That compares with around 45 rupees. So good all around.
Okay, good all around.
And the bonus.
Yes, and good on you, Nigel. You were the one to spot it earlier on, much earlier. And now, of course, the numbers have been quite good. So thanks a lot for alerting us. But Vakrangi, can't say the same about that, Lata.
Yes, I think the latest blow is that auditors, PwC, have resigned from the company as the statutory auditors. The company has given its own defense. It says that PwC, of course, signed the audited accounts till December 31st, and they had no problem with that. They said that they are saying that the audit committee also was provided with all the information, and the audit committee is completely satisfied with all the company's explanation to the various rumors raised in the press. But what you have to note is that in Jan, the stock was 500 rupees, and at close on Friday, on a day when the markets ran up, it fell 5% and ended at 105. So clearly there's a lot of more than just speculative trouble on the stock. Of course, there was speculative overbidding that also brought the stock down. There was a bubble there, but there have been other reasons, and this is going to be a very big blow, the auditor resigning.
Okay, that's of course Vakrangi, and when we talk about Vakrangi, somehow we also talk about PC Jewelers, and that of course was stock of last week, a big decline. Sonal, some fresh news there?
Yeah, so PC Jewelers will be considering buyback on May 25th. Now, if we consider the financials, equity and reserves of the company as in September 30th is around 3,600 crores, and cash equivalents is around 1,400 crores. So if we go by the shareholders' approval, they can buy back around 910 crore rupees, and by board approval, they will be able to buy around 360 crore rupees. But the main question remains whether the promoters will be participating in this buyback buyback or not. Also, the stock is literally halved in last 1 week. So might be a breather for the stock today, but we can't really say. But this stock will be in focus today.
Oh yes, and keep in mind, I mean, even Bhakrangi had approved buyback, but we just kept hitting lower circuit after 3 or 4 days of upper circuit. So best to perhaps stay out from these stocks. But Anisha, what about other results?
Well, yes, Anuj, I have more greens and reds, so that's a good news coming as far as the result is concerned. Starting with MCX, where the company's operating profit has jumped by around 31%. In fact, it has reported highest growth rate in average daily turnover in the last 13 quarters, so expect that to show a green tick. Moving on to Shoppers Stop, where the revenue, yes, have declined by 7%, but the good news is that the operating margins have expanded versus an expectation of a contraction, and also the company's debt and the balance sheet looks a lot more healthier, and that should pan out for the stock today. Moving on to Equitas Holdings, well, the NIMs are a bit weak than expected, but it is the loan growth which is the highest in 4 quarters. In fact, the GNPA has also fallen by around 40% quarter-on-quarter in absolute terms, so that should also hold out in the green. Now, what did not do well in terms of earnings? IDFC reported weak earnings. In fact, their profits deteriorated to just a 2 crore number versus 135 crore reported last year, and that's because the provisions have really gone up higher. So the provisions are now 233 crores versus 45 crores quarter-on-quarter, and that's the reason perhaps that stock might see a bit of red tick. It's actually a bit of opposite story when it comes to Shrey Infrastructure, where the top line remained weak, but the profit is actually aided by lower provisioning, and that's the reason we see a profit number of 117 crores, 86% increase versus last year. Back to you.
Okay, so plenty of stocks to talk about. Thanks a lot for that, Anisha. But here's a quick recap now of our top 10 stocks expected to gain today. Sun Pharma, Idea Cellular, RBL Bank, Shree Cement, UPL, Thyrocare, LG Balakrishnan, MCX, Shoppers Stop, Equitas and PC Jewelers. While stocks that could be under pressure this morning, Maruti, Reliance Industries, Canfin Homes, Interglobe Aviation, IDFC, Shrey Infrastructure and Vakrangi. But as we were discussing,
I think the Indigo point needs a little more explanation. Sonia spoke about, Ramdev also referring to this news. Actually, we got Ramdev Agarwal on this information, and let's just listen in to how he has interpreted the inevitable change of guard at Interglobe Aviation.
As I said even yesterday, that Aditya Ghosh had been the face of Indigo. We have interacted with the finest person and most capable leader of the aviation company.
Right.
But it is not, see, in businesses what matters is the strategy and the whole team. And he was one of the very important part of the entire team. So the team is still intact, and I hope they will be able to repair the damage and get as competent guy. And if you don't get as competent, you split the role and get 2 guys.
Right.
So 1 plus 2 might be bigger than Mr. Ghosh. So, but I don't see Indigo is much bigger than any individual for that matter.
Absolutely.
So my sense is that yes, a market may react it negatively. They have already done it on Friday.
Right.
Monday again somewhat, but if by chance if there is too much of panic or something like that, I think it's a terrific opportunity to buy. I don't think the prospect of the business or the company has anything to do with one individual, and it is not going to change.
So what you're saying is the development which we've seen yesterday, as a fund house, you remain bullish on the stock.
If it was a 24 karat gold till Thursday, it remains a 24 karat gold on Monday also.
Okay, that is well put, I guess. Indigo has been Motilal Oswal's, their biggest buy since the time it listed. They've been sitting on it and they've made a lot of money.
No, I think
so I guess he's still backing it right now.
No, I think that is the disclosure. It's coming from someone who has a big investment in the stock.
Yes, so we must keep that in mind. They continue to be bullish on the stock. As they say, no person is bigger than the establishment.